ING Investment Management. Valentijn van Nieuwenhuijzen is the group's chief economist and head of strategy. He joins me now. So, first of all, a bailout sooner rather than later?
Probably, well, yeah. I mean, it seems increasingly impossible to find another solution. Probably postpone it for a couple of weeks and have some clarity on the government. But in the end, they will need some additional support. And
speaking of clarity, what kind of size are we looking at?
I mean, I think the sizes that you're talking about are realistic. But I think, you know, the key point basically for markets right now is that actually this is not translating into a systemic crisis. It's really more seen as a Portugal-specific crisis. So all these numbers that have been floating around, I would argue, would not have a too much damaging effect on general market sentiment.
So this is unlikely to spook the markets, but nevertheless, if we do see a bailout for Portugal, will it stop the crisis from spreading? What does it mean for contagion?
I think, you know, that's the positive news of the last couple of weeks. There are less signs of contagion. Spain is strongly outperforming the other peripherals. And I think if you just look at the euro, for example, it's very clear that this is being read very differently by markets than what we saw in the middle of last year.
Nevertheless, Spain is in the process right now of restructuring its smaller regional banks, the cajas. We had a downgrade for 30 of its banks just yesterday. Could Spain go the way of Portugal if Portugal does indeed need a bailout?
I think it's still very unlikely. I mean, Spain has been outperforming all the peripheral countries with respect to reform on the economic side, on the financial side, on the financial sector side, on the pension side. So I think
comparing it to the other peripheral countries, it's not all that difficult to
outperform. I agree, but I mean also economically, cyclically, the strength in exports, for example, in Spain, I do think that Spain has a very low probability of really going to this, let's say, additional liquidity support.
Okay, so with that in mind, when you're looking at investment strategy right now, we have the European debt story. I mean, that was always there, but the concerns really resurfacing on the markets. This on top of a nuclear crisis in Japan, turmoil in the Middle East. How is this impacting appetite for riskier assets?
Well, I mean, it has, of course, corrected over the last couple of days. But in general, I think especially the other two elements, Japan and the Middle East, are key for markets. Not so much because they really have changed the base case outlook for the global economy, but the uncertainty has increased massively. So I think we, as a lot of other investors, have taken a step back. But we have not shifted our base case thinking, which remains fairly constructive on the economy and also constructive on risky assets for later in the year.
What do you mean taking a step back?
Well, I mean, we were very overweighted sort of risky assets like equities, commodities, credits, real estate, and we scaled that back due to the increase in uncertainty. But we have not moved to, let's say, underweight positions or negative views on these types of assets. And probably if some of the uncertainty fades, if the oil price doesn't speed up further, then we'll probably move into these markets again.
But what is the likelihood of that uncertainty fading? I mean, right now you have a situation where we were speaking about European debt, you know, leaders still trying to come up with some sort of comprehensive solution to the debt crisis. So that story is still going on. Turmoil in the Middle East. I mean, if anything, that's escalating. Nuclear crisis in Japan, the world's third largest economy, effects are likely to ripple well beyond its borders and indeed the region.
Well, I think, you know, at the end, the stories are known by now. And the only thing that's going to impact markets really negatively if we get additional negative news. With respect to Europe, the chances are fairly limited as long as Spain doesn't get into big problems.
That's a big if.
Well, yeah, but like I said earlier, I think actually the likelihood isn't too big that Spain will need to go to the bailout fund. With respect to Japan, it seems to be economically, it's mainly a temporary impact, a replacement within the region of activity, a replacement over time. But in the end, despite the high cost, I think Japan can deal with it. And I don't think...
Despite the debt burden that it was struggling under even before the earthquake?
Absolutely, because in the end, you know, this is an additional to the overall debt cost in Japan. But remember, Japan is the largest creditor nation in the world. I think Japan as a whole can deal with this.
Great to get your thoughts. Thank you so much for coming in. Valentijn van Nieuwenhuijzen of ING Investment Management.